Thanks, Armin, and dear guest. I'm Bai Yang from the China Central Depository Company. So it's our first time to join the AECSD meeting. Thanks again for the Armin and the NSD team to inviting us to join this seminar. So today I'm gonna share with you about our cultural management service and some development and innovation about our service. Okay, to give a clear picture of our cultural management service, I will be sharing three parts. So first, I would like to give you a brief introduction about the China interbank bond market. According to the BIS, China bond market ranking at 25th in the world in 1997. But after 15 years development, the China bond market has jumped to the second place, only followed by the US market. And the Chinese market is still expecting the great potential of the further development. Actually, in recent year, we are also made many efforts to enhance the opening up of the Chinese bond market and promote the rapid development of the market. For the foreign investors, few people would imagine how big and how popular this market can be. From the 2010 to the 2016, only few foreign investors were approved by the regulator on the case-by-case basis to enter the China bond market. But with the launch of a series of liberalization policy, especially in the 2016, the institutional foreign investor and the funds were allowed to invest in the CNBM without an administration approval and quota. Since then, the regulatory environment has become more and more friendly to the foreign investors. In the 2017, the Hong Kong Bond Connect has been launched. In 2018, the Chinese Taxation Bureau exempted the foreign investor from value-added tax on bond transaction and the interest income. From 2019 to 2020, the China government bond was respectively included in the Bloomberg and the JP Morgan's index. In March of this year, the FIS Russell released its final assessment result and officially announced including China government bond in its World Government Bond Index. The inclusion of the RMB bond giving China bond market a big chance to take a growing proportion in global investors' portfolio. We are expecting that a large number of index tracking funds will hold more RMB bond in the near future. As a back office of the China bond market, our company functions as a CSD and the operator of the security settlement system in China bond market. CCDC serves as a hub of the safe and smooth operation of the China bond market by providing comprehensive service over the life cycle of the bonds, including issuance, registration, depository, transaction settlement, interest payment, principal redemption, valuation, collateral management, and the information disclosure. As a major service provider, CCDC registered over 77 trillion RMB bond at the end of 2020, accounting for the 74% of the entire market. We all know the bond is perfectly suitable to be used as collateral since it's a stable value, high liquidity, and a lower cost. The fact that CCDC as a core FMI in China bond market hold 100% China government bond and other high quality liquidity asset under custody, which gave us the advantage to facilitate the market participant to use bond as a collateral. So in 1994, the China began to use bond as collateral in its repo market. And since then, the bond has been used as collateral as part of macro-level policy implementation and in financial transactions. The CCDC began offering collateral management service since 2011. And you can see in this chart showing that the amount of collateral management has grown at an enormous rate from 3 trillion RMB in 2013 to nearly 16 trillion RMB to the 2020. And the CCDC currently provides professional collateral management service for more than 9,000 market participants and becoming the largest bond collateral management institution across the globe. CCDC actively promotes third-party collateral management service and provide border space for cross-border use of the RMB bond through a professional, intelligent, and standardized collateral management model. CCDC performed the duty of the collateral manager, perform monitoring work such as valuation, mark-to-market, and collateral evaluation on the secure asset pool, as well as the enforcement rules, and provide the participating party with a comprehensive and detailed data information on their collateral. CCDC's collateral management service also covers various fields across China's financial market, including the monetary policy of the central bank, fiscal policy of the Ministry of Finance, and the foreign exchange management policy, social security system, derivatives market, and cross-border collateral business, tightly holding its mission as the whole FMI of the China bond market. Well, CCDC collateral management service continue to develop. We have also noticed that driven by the fundamental of the Chinese economic and the opening up of the bond market, the number of foreign investors entering China bond market is increasing sharply. So how to help domestic and the foreign investor to use RMB bond as collateral and improve the efficiency of cross-border business has gradually come to our great concern. In response to the national strategy of the financial opening up, CCDC have invest great effort in exploring cross-border issuance, cross-border financing, currency swap, foreign currency interbank lending, so as to widen and deepen in the use of RMB bond as collateral. Successful attempts so far, including serving currency swap pledge, supporting overseas issuance of green cover bond by a Chinese bank, and helping domestic and overseas commercial bank with cross-border financing. Here is one example. In April last year, we cooperated with a commercial bank and a financial leasing company to launch the first foreign currency financing collateral management business in the Shanghai Free Trade Zone. In addition to supporting the financing business, the bond collateral can also be used at the margin in the derivatives market. In the 2015, following approval by the China Security Regulatory Commission, the Ministry of the Finance, and the Central Bank, the CCDC and the China Financial Future Exchange published a rule allow bonds to be used as margin for financial derivatives. In November 2019, the MOU was signed by the CCDC, China Financial Future Exchange, and the Shanghai Dalian Zhengzhou Commodity Exchange to allow the use of a bond as margin in the entire future market. Since 2019, over 14 billion RMB bond has been paused as margin for future contracts, representing a year-on-year increase to over 50 times. Bonds are currently accepted by the margin for all types of financial future contracts. And the scope of investor has also been expanded to include qualified foreign institutional investor. As the bond and future market continue to open up, the use of the China government bond as margin in derivatives contract globally will likely continue growth. In order to further promote RMB bond as qualified collateral in the global market, in 2019, CCDC and the London Clearing House worked together to include RMB bonds as a qualified collateral in UK market into the result of the China-UK financial dialogue. On 15 September of 2020, the joint white paper named as the use of RMB denominated Chinese government bond as margin for derivatives transaction by CCDC and ISTA was released. As the first collaboration of its kind between a Chinese FMI and an international industrial association, the white paper hoped to offer a comprehensive overview of the opportunities and challenges arising from the use of RMB bond as initial margin in the OTC derivatives market, and shed a new light on the cross-border use of RMB bonds. Meanwhile, to meet the actual needs of the market participants, we have also launched the default disposal service. In June 2019, the PBOC issued a notice regulation between of the bond default disposal in repos. The CCDC have since issued implementing rules and guidelines to support an efficient collateral enforcement regime. CCDC has further extended the scope of the default disposal mechanism to cover the default bond in repo, third-party and the bilateral collateral, and the cross-border collateral arrangements through a pre-authorization granted in favor of the CCDC. This has brought China's collateral enforcement rule closer to the self-help remedy, which is more in line with the international practice. According to the guideline on the disposal of the collateral upon default released by the CCDC, disposal of the collateral could be conducted via auction, private sale, and conversion into value, depending on the investor's need. All these developments are intended to strengthen the foundation of the China government bond to be used as an eligible collateral. Also, in terms of the international cooperation, CCDC have signed the MOU with a lot of ISD and the CSD, like the Euroclear, Clearstream, and NSD, and continue to strengthen the cross-border collaboration with custodian bank, with the will of creating a pathway for the mutual recognition of the collateral, and to connect China with the international market, enhance connectivity between the FMI, would help to reduce potential barriers to cross-border transactions, thereby facilitating a higher degree of the market integration. Thanks, that's all my presentation today. Here's my email. If you have any questions, would like to let me know. So thanks again for Armin and the NSD to inviting us to join this seminar.
Thank you, Mr. Bai, for a very interesting presentation. It was our pleasure to hear the CCDC experience, and you have a huge collateral management service business. So it's a lot to learn, I'm sure, from your experience. Thank you very much. We will be glad for your participation in the rest of the seminar and other events of ACSD as well. Thank you.
Thank you, Armin.